So without further ado, I want to pass it over and welcome Ms. Shanta Givens. She is actually a financial accountant for a CPA firm called PRS. She received her Bachelor's of Science in Business Administration from the University of Arkansas, and she's actually from the Little Rock, Arkansas area. And then she received her Master's of Science in Accounting from the University of Texas at Dallas. So she's got a lot of great information that she wants to pass along to you tonight, and we are going to let her take it away. Shanta, are you ready?
Yes, I'm ready.
All right.
Thank you so much for the opportunity to present to your audience of parents in regards to tax changes, as well as your ability to be able to pay for college. And then we'll discuss also some useful tips to teach your children about money. So we'll go ahead and get started. So again, we'll start out with the summary of the 2018 tax changes. Um, And then we will go into ways to pay for college as well as ways to decrease the costs, and then practical ways to begin teaching your kids about money. So I do want to first make the disclaimer that this is tax information and not tax advice. So I would definitely recommend that you consult a tax professional so that you receive the best information for your particular situation. So I'm just going to summarize several of the tax changes, not all of them, but I just wanted to kind of highlight the significant ones that would really affect the parents. And so I'll start out with the standard deduction. So whenever you are filing your taxes, if you've already filed your 2017 taxes or you still need to file them, there you can either itemize your expenses, or you can take the standard deduction. And so pretty much when you itemize, you're going through and you're listing all of your expenses that you had for the tax year. And if your itemized deductions are greater than the standard, then you would take the itemized. However, if not, then there is this standard flat amount that you can take based on your status. And so essentially what you're seeing is that this amount has essentially doubled. For instance, for the single taxpayer, you see it went from 6,350 to 12,000. Part of this is related to that it's eliminating the personal exemption, and that's another tax change for 2018. So the personal exemption is essentially the amount a taxpayer gets to deduct from their taxable income for themselves and any dependents that they can claim on their tax return. So essentially, this tax reform bill simplified this portion of the income tax process. Are we still there?
Did we lose you? We
I'm
can't.
still here. Can you hear
We
me?
seem to have lost your
Okay.
document.
Yes. Do I need to hit
Um,
share screen?
no, I'm
Or
going to have to reload it. Give me just a second. If you want to continue, and I'll add it as you're talking.
okay. So essentially, the tax reform bill simplified this portion of the income tax process. So um, pretty much what they're saying is that the increase in the standard deduction will make up for the elimination of the personal exemption, which is hopefully going to leave more money in our pockets. Again, I think it's going to depend on your particular situation, so you definitely want to look at that. Um, there is a tax calculator, IRS withholding calculator that is online. So if you just Google that, and then you pretty much go through and say, what your status is. Are you single, married? How many dependents would you have? It's basically just taking you through essentially kind of what a W-4 would take you through, and then it's going to tell you what they think that you should include on your W-4. Because what you don't want to do is overpay in your taxes, and then you don't also at the same time want to underpay your taxes so you don't have a tax liability. So so that's one of them, the standard deduction, the increase in the standard deduction. The second one that I was going to discuss was the personal exemption. So they kind of, tied together. And essentially, for the previous law, the standard, the personal exemption was 4,050 per person, and so now that's completely eliminated. The third change that I was going to discuss was related to the child tax credit. So the previous law, you could receive a tax credit of up to $1,000 for each child under 17 years old that's claimed as a dependent. But now the new law has increased that credit up to $2,000 per child, and the first 1,400 would be refundable. So essentially what they're saying is that the credit could reduce your tax liability below zero, and you would still be able to receive a tax refund. So for 2017, what you're filing now, the credit can only reduce your tax liability to zero. You can't receive a refund. If your tax liability is something less than 1,000, then you can only, like, say you have $500 of a tax liability left, and the child tax credit could only be used up to $500. So that is a change. Also, the change as far as the threshold. So if you were married filing jointly, the previous law was 110,000, but now for married filing jointly for 2018 going forward, it's 400,000. So basically, it's just increasing the number of taxpayers that can use this credit. And then next, I was going to discuss the tax brackets. And I was just going to kind of show how it's been kind of split just depending on where you fell. So if we think about, people that are, middle, the majority of the people that are working class Americans, we essentially are in that 25% range, depending, some are less, some are greater. But that's where kind of the middle class falls. And so there's still 7 tax brackets, but the range of income in those tax brackets have just essentially been adjusted. And if we get the screen back, then I will kind of show, I think she's loading it now.
I apologize. It took me a minute to find it, but it's coming up now.
Okay. So as that's coming up, I would say definitely go online and use that that calculator that can tell you approximately what you should be withholding from your paycheck each pay period. And then it's a good time to go in and maybe make some adjustments to your W-4 with your employer. So these are the things that I was discussing. So the child tax credit, basically, you can see that the threshold has increased significantly so that more people can use it. And then these are the tax brackets. So these are the previous tax brackets or the current tax brackets of what you are filing your taxes for now. And so I was going to focus on the 25% marginal tax rate. And I'll just take the single tax bracket as the example. So you see it's at 37.9 up to 91.9. And that's, kind of your middle class for a lot of people. And now you'll see that it's essentially split. So kind of the lower part of that bracket is now at 22%, and then the higher end of that bracket is now at 24. So you both decreased from 25 to either 22 or 24. And so I'll give you guys a minute, maybe if you're married filing jointly, to kind of see where you fall, or head of household, and then there's married filing separately. All of this information is out there. Just if you did a Google search, there's a lot of different things out there. I've looked on the IRS website and I didn't see anything that was a clear summary, but you can see where different pieces were updated. So, for example, today I needed to look up for a client related to meals and entertainment, and now you can't deduct entertainment, but you can still deduct meals. So I needed to go and try to find that in the IRS guidance, and I couldn't find that exactly, but I do know that that changed. So I'll move on now from just kind of the summary of tax changes. Of course, if anyone has any questions at the end, I can definitely answer any specific questions on that. But then just now, how do we pay for college? So hopefully, you saw a slight increase in your pay. If you've noticed from January to February, your taxes should have been reduced. And so hopefully this can help you to begin to plan. But then I just want to talk through some different ways or methods that you can think about paying for college, as well as the student themselves assisting in paying for college too. I hear often that the parent paying for college is a privilege, and so I feel like I was definitely blessed to have parents that helped to pay for school. And that was definitely a privilege that they paid for that. So, how to save for college? So I'll start first with the free application for federal student aid, or also known as the FAFSA. So I would highly, highly recommend that everyone complete this. Some people say, oh, well, I make too much money. Still complete it. You do not know. And the earlier, the better, I would say, is that, you fill that out. I remember, telling my mom, I need all of your information so we can go and complete this, and we need to do it ASAP. And I think now you can even go in, I think as early as October. So if you have a graduating senior, and you can go in October of their senior year and create your account and all of that and start putting in all of your information. And then you would need to update for the once you receive your W-2 for that tax year. But you essentially can qualify for grants, loans, and work study programs. And so with grants, these are first come, first serve. That's why I say the earlier the better, so that you can take advantage of that. And so grants, these are things that you do not have to pay back. This is money that is given to you. And then loans you do have to pay back. There are various types of loans. That could be a totally different presentation, just talking about the loans and what they look like and all those things like that. And then you have work study programs, and essentially what those are, it's as your student would essentially work on campus. So say if it's the bursar's office or the admissions office, they would work, and in exchange for working, their tuition or portion of their tuition is being paid. And so I'll stop at loans. Loans are out there for you to have. But there's so many other resources that could be used first before deciding to use loans. We know when we talk about student loan crisis and what's going on right now, and people a lot of times they end up having these loans their 30s, 40s, or maybe even later than that. Yes, there are some loan forgiveness programs, but we know that loans plague a lot of people, and so I just want to give you the information so that you can see there's other options outside of loans, because a lot of people only think that loans are the only way to go. I've had people that are my age, or when I was that age, they were like, oh, well, I guess I'll have to get a loan for school, and they didn't realize that there were other ways or avenues to be able to pay for school. So I just wanted to put that caveat out there about them. Scholarships are definitely ways that you can go around, not having to get loans. So I had grants. I used the work study program up to a certain point, and I also applied for scholarships, and that's how I was able to pay for undergrad. And then my parents paid for my grad school, I guess because they didn't have to pay for undergrad. And so there are so many scholarships out there. I mean, there's a plethora of scholarships. I would say talk to your counselor or whoever has that responsibility at your school. I would also go to your local churches, their scholarships. If there's any other service organizations, sororities, fraternities, um, young ladies can do pageants, and I don't know what they call it for the young men, but there's different types of programs that the young men can be a part of. There's scholarships through grocery stores. I mean, there's scholarships for people that are left-handed. I mean, there's so many out there. If your student already knows what they want to major in, then there are scholarships out there for particular majors. So there's STEM scholarships if it's anything related to science, technology, um, engineering, math, those types of things. I would definitely say use the resources. You can Google to see different scholarships that are out there, but definitely make that a part of your plan. If because you'll need that to hopefully supplement the grants if you qualify for those or the work study programs that you may do. There's also the option to start a 529 plan or a Coverdell education savings plan. So essentially, what a 529 plan is that it acts similarly to a Roth IRA for your kids' college education. And the funds that are within the account are invested and grow tax free, but they can only be used for qualifying college expenses. Okay, so sometimes parents, when their child is born, they'll start a 529 plan. And you can talk with your financial advisor and they can give you information about how to start that. So they can start it when they're babies, and then it grows for the 18 years. Grandparents, instead of gifting them toys or whatever at Christmas, they may contribute towards the 529 plan. But this is money that you're contributing and it's growing. Like I said, similar to your IRA, like your retirement account. And then you're able to draw from that money as they're in school. So maybe you have scholarships that can pay for the first 2 years, but then you need to be able to pay for the last 2 years. Then you could pull from, the 529. One change for 2018 related to the taxes that we were talking about earlier is that now you can use funds from that 529 plan and pay for your education expenses for K through 12. So it's not just for college anymore. You can use it for private school, or if you have a tutor for your child or something, anything that is education related, you can now use funds from that plan. And then the Coverdell, essentially, it's the same thing, but there's more limitations. So with the 529, you can contribute whatever you want to the plan in a tax year. But with the Coverdell, you can only contribute up to $2,000 each tax year. So there's a couple more limitations on it. And people used to use this a lot more because the Coverdell you could use for K through 12 because you couldn't with the 529. But now that the 529 allows you, a lot more people are using that as the option. So that's another way that parents can put back money. And it's not too late. So if you have a 10th grader, you can start putting money back for your child, because it's not that they have to use it freshman year. They can start using it maybe their junior year or their senior year. So another way that you can start to save for college is through summer internships. Your student having summer internships, or maybe they're working part-time during school. Maybe they're paying for their expenses, their living expenses, their gas and grocery store, all that stuff like that, with the money that they're working from their part-time job. So that helps to alleviate, having to fund their account, or maybe they're just paying for their books or whatever it is. But, your student actually contributing towards that helps to pay for college. Another point is attending in-state colleges and universities. And so going out of state is extremely expensive. I came to Texas to go to grad school. And to be honest, I think at the age of 22, I didn't realize how much more expensive it was going to be. So I had a personal experience with that. And so taking advantage of the schools that are here in Texas, there's some great schools here, and that it would be advantageous, especially if scholarships have not been given. So if a child has a scholarship to attend somewhere out of state, and it's helping to cover costs, great. But if not, then maybe looking at staying in state as a possibility. Another option that I see a lot more people taking advantage of now are attending community college for basic classes or taking college courses during high school. So I know a lot of students come back each summer. So say they attend a 4-year institution, but they come back each summer and they take community college courses so that they don't have to take them at school. And what I'm talking about are like your English classes, your basic maths, and maybe some basic science. Maybe you've got a speech or communications credit that you have to fulfill for that 4-year institution. You do want to be sure that they're transferable. And then also while they're in high school, there's some programs out there that students can take advantage of taking those college courses while they're in school and they're getting dual credit. So, for example, I was able to do that in high school, and when I graduated, I had 15 credits already before I even went to my 4-year institution. So it really does help to just kind of curb the cost. And maybe they go to community college for the 2 years and then they transfer to the 4-year institution once they get into their major. So that's, you're saving costs in several ways. If the community college is local, then maybe they're able to curb costs as far as they're living at home, still staying at home. And then, of course, the actual classes themselves are less expensive. So now I'm going to start talking about just teaching your kids about money. So I think sometimes parents feel like they aren't good with money themselves, so maybe they can't give money management advice. I hear that. I think back when I was a kid, and we didn't really talk about money. I mean, sometimes we did, but I mean, I wasn't active in knowing what was going on per se. And so that just wasn't a really big conversation that was had in my household. But I would encourage you to discuss the things that you do know. So say, you as a parent, you're in debt and you don't like being in this current situation. So then think about, okay, well, what would you advise your child to do to stay out of debt? And so those are conversations that you can start having, with your student, to just kind of let them know, hey, credit cards and this, that, and the other, when you use them, this is what it really means. And, it's not like you're getting into the nuts and bolts of, what interest is and a credit score or whatever. I mean, as they get older, of course, you can start to talk about those things. But, just kind of giving them the general knowledge about these things can really help them a long way, because, again, we didn't talk about credit cards. I just knew that it was something that I could use. And so when I got to college, I signed up for one, and it started out great, and then it didn't end so well. But I was able to get past all of that. So the first thing that I just want to say is just that you just have to begin having those conversations and allowing them to see, like, when you pay bills or how you pay bills, just those basic things just really starts to help them think about money and what it is. And I think them understanding the value of earning money is really big. Whenever I was able to get a part-time job, that's my first point. I was able to get a part-time job, and so it was interesting to see how I held on to my money versus when my dad gave me money, and I spent that a lot quicker than the money that I earned myself, because I think I had more of a value of, okay, 8 hours it took me, to earn X dollars, X amount of dollars. So maybe allowing your child to have a part-time job, whether it's only in the summer or you allow them to work during the school year on the weekends or something like that. But that helps them to, kind of see what it means to earn money. Maybe they don't have time to work a job outside of the house. And that's where this idea of maybe commission comes in. So versus allowance. So maybe, allowance would be you giving your child $30 a week to cover their lunch and maybe gas or something like that. But instead of allowance, maybe it could be commission. So they have to do things around the house or to help out in the home in order to earn money. So maybe it's washing the car. Maybe if your child drives, you give them the grocery list and they go and get the groceries. Or maybe they, whatever it's doing the dishes after dinner, or, taking out the trash, whatever you want to assign value to, right? Then they're understanding that there's value behind doing these things. Um, and then I would also say giving them a responsibility of paying bills when they're due. So even if you give them allowance, telling them, hey, your phone bill is due on the 15th, you're responsible for going online or going to the store or whatever it is and actually paying that bill. And so I saw that on both sides. Sometimes my dad paid for it, and then once I started working, he told me, you're responsible for your phone bill now. And so that was part of my responsibility. And so I had to make sure that I paid it on time. And then say if you have a family plan, right? Maybe they're just responsible for giving you $50 or something like that. And then understanding when they're late that there's consequences. So, either you may get a late fee, a $5 late fee, or they turn it off. I mean, if you're paying the bill, then I guess it won't get turned off. But, allowing them to understand that there's consequences behind if they're late on a payment. I heard a really good idea about helping to build credit while in college, or how a parent can help their child build their credit while they're in college. And what they did is, so say your child has a credit card, and they're away at college, and so that credit card is for gas, for getting their groceries. Maybe there's something else miscellaneous or something that they need to do, but they have a balance, like they can say only spend $200 in a month or something like that. And the parent, their name is on it, like they get the bills every month. And either the child, say the child, is responsible for paying it, so maybe sending money to mom or dad, or maybe the parent, wants to be responsible, saying, hey, you have $200 allotment, and if you stay within that, I'll pay the 200. But if you happen to go over it, then you need to pay me whatever you like the excess. However, the parent wants to set that up, but essentially the bills are getting paid monthly and on time, and that's the idea, because the parent is the one that's responsible for the bill. And then once the child graduates, they actually have a good credit score once they graduate, so they can go out and get an apartment, or if they need to go out and get a new car. Because a lot of times whenever you get out of college, if they didn't get a credit card in college, they have no credit, and so now it's this process of trying to build it. So just kind of helping them and guiding them along the way. Now this is if you feel comfortable with credit. If you don't want to do anything with credit, then you don't have to do it. Maybe you help them just be responsible with their debit card. And I didn't put this point on the slide, but maybe the idea of allowing your child, even when they're in high school, to have a bank account, a savings account, and they're responsible for going and making deposits or withdrawals, and looking at their monthly expenses. And that's going to tie into budgeting, which I'll cover in just a second. But essentially, it's just giving them that responsibility, and again, getting used to looking at numbers and kind of understanding, like, okay, if you overdraft, then there's consequences to that. There's an overdraft fee, and things like that. So again, just giving them that responsibility, and so that they can understand just the process. And then when it comes to the fundamentals of budgeting, this is something that I did not get into until I was an adult. I've always been very, very thrifty, but I didn't actively budget. And so what you want to teach your student is just kind of the basic principles of spend, save, and share, right? You make money, or you get money, you of course want to spend some of it, but then also you need to be able to save for a rainy day. And then also the share aspect is that, it's not all about us. We should be able to share either with our local church or our favorite charity, or, donations, or whatever it is, but just kind of those basic principles of spending, saving, and sharing. And the fundamental thing about budgeting is that every dollar should have a value. And we're going to go over a budgeting example here. Okay, so say your student, they work part-time at Wendy's, and they bring home $400. So that, all the taxes and everything have come out, and they bring home $400. And so here's some examples of expenses that your team may have. Some kids may not drive yet, so of course they wouldn't have these expenses. But You got a cell phone, gas, maybe some food, giving, and some other miscellaneous things. But essentially, what you see is that the income equals the expenses. So there should be no balance at the bottom. It should be a zero-based balance, and you see the basic principles of spending, saving, and giving within those expenses there. So again, if there maybe you say, hey, we were thinking about buying you a car, but part of that is that you have to save at least $1,000 towards the car or something like that. So they could start saving, that'd be their line item to start saving for that. Or if they're, saving for college, like, hey, you need to start saving the way that things are looking, you may have to pay for your books. And so they start to, save money so they can pay for their books. So really just starting to break down their expenses, and then they can see like what they're going over on. So maybe they spent $60 on their food for that particular month. And then kind of understanding what that means and what that's going to pull away from, because they only had $400 for that particular month. So I just think these are just general ways that you can begin to have a conversation, some tools, some tips that you can begin to have so that you can start to teach your kids about money. And that's all that I had for you all today.
Great, thank you, Shanta.
Over to
what I was thinking while you were going over the budgeting stuff with the students was, the parents will probably remember this from the Cosby Show and how they were doing that interaction of, buying an apartment and getting furniture inside of the Cosby house, and they were kind of going through that scenario. It made me giggle, but that is exactly what our kids need. Is we need to practice those scenarios in the safety of our homes. And when I think back on some of the mistakes I made as a young adult and, becoming, going into college, it was those experiences that I hadn't had provided by my parents. So anything that seems like commonplace to us because we've been through it and we've experienced it, we got to remember that our students have not and try to get them involved as well. So I really appreciated that last section to remind us just to involve our kids in maybe just little pieces. They don't need to know everything about our finances, but just to start to make them aware that everything has a price. I really appreciate that. Thank you. So we're going to open it up here to any questions that you all might have, and she'll be able to answer those for you. So we'll give you a minute. If you wanted to type in a question, she will be happy to answer that for you.
Okay, so we have one question. Which is better, the 529 or the Coverdell plan? So and again, this is not tax advice, but I would say that the 529 plan gives you a lot more options, because there's not a limit to how much you can contribute in that 529 plan. So that would, I say, be the better. Oh, you're welcome. You're welcome for the tips.
Okay, well, you did such a great job. It looks like you answered all the questions before they had questions. So we appreciate you giving your time this evening. Oh, we had another one come in.
Okay, so student credit card, is there a preferred company? I would do some research on credit cards so that you can kind of see, especially when it comes to interest rates and all of that stuff like that. There's one company, and it's not necessarily related to student credit cards, but USAA. They have good interest rates if you're able to get access to them. USAA, that's kind of the military company where you can get insurance and credit cards and bank cards. Would the secure card be better to start them out with? Um, you as far as secured, as far as like there's a limit or like okay, yeah, with the limit. Yes, you definitely want to be able to ensure that there's a limit. So you can put, so what you can do is put a cap and freeze it. Sometimes I've even done this on my own credit card. I just call them and I say, hey, can you freeze the limit? Because what they'll do a lot of times, they'll keep inching up the limit. So say you barely go over it, or you'll look and you'll see that it continues to increase. So you can definitely put a limit on it or freeze it and say, hey, no increases, it should only be $250. And that would definitely keep them from even going over because they wouldn't even be able to use it. And that's great that you have USAA. So yeah, I would look at them and see, what the current rates are. You're welcome.
Okay, Ms. Givens, thank you. I think we have ran through our questions. So we just have a few housekeeping items to do. So you're welcome to stay on and join us. Otherwise, we just wanted to wish you a good evening and hopefully we can, get some more tips from you in the future.